Hello everyone and welcome into the channel. My name is Brent, and in today's video we're going to go ahead and do our M1 Finance recap of the week between the 11th to the 15th of April 2022. We can see that we've had 4 weeks of being green. From 1 month ago the portfolio was sitting at 40,981, and here we are within the last week we topped off at 43,893. Now the market had a bit of a tumble this week, our portfolio had a bit of a tumble, so we're going to go ahead and hit 5 different areas today. Number 1, the overall performance of the portfolio. Number 2, the weekly performance of the portfolio in comparison to the S&P 500. Number 3, the activity. What did we buy? What did we sell? What dividends came in? We're going to take those buys and go into number 4, update our current portfolio, check out what the portfolio is currently getting as far as dividend income. And number 5, what exactly are we buying going into Monday the 18th of April, right? We have 2 weeks left here in April. I hope everyone had a great Easter, and let's go ahead and get into the portfolio. So starting off at number 1, the overall performance of the portfolio. Here, I think we had a high here recently again of 77%. We just can't break that percentage return, right? We're back at 72%. We are still up pretty nicely in gains, Our market gains may fluctuate, but those dividends continue to roll in. We're now nearly breaking $3,200 of dividends. So earned dividends, we're at $3,184. We should be breaking $3,200 here very shortly. And then our market gains, that'll fluctuate up and down. Right now we're sitting at $8,690 in market gains. This portfolio was created just 4 years ago. Here on the channel, if you go back 4 years on this channel, we made this portfolio from nothing. It had $0. We went through the whole process of opening the account, funding it, beginning the Roth IRA here on the account, and then we set up a weekly plan where we set up, we're depositing about $127 and some change into this account. Now this may fluctuate depending on, how many weeks are remaining in the year, or if you have opportunity in the market. If it dips down, I may do like a lump sum, but for the most part, I keep it at around $100 and some per week, just averaging into the market. So that's a little bit of the recap there as far as the portfolio, if you guys are brand new out there. Now our top 3 performers are Apple. Apple has been beasting it, but it has had a bit of a pullback this past week. ABM Industries is actually in second place. Now this is one that hasn't been up here in quite a while, so it's pretty interesting to see ABM being up in second place. Generally, I believe last week it had been AbbVie and Pfizer fighting for second and third place. Lockheed Martin and AbbVie here and Pfizer are all along those lines. Main Street has definitely pulled back slightly. It had been up around 125, 130% in the past, but it has pulled back slightly. You can kind of see these positions kind of fluctuating from time to time, which is completely normal. Down towards the bottom, we have a new position that is entered into the red, which is IIPR. This is down roughly 6.39%. Now this position in itself has had a ton of volatility since we started buying it. We started buying it just about March of 2021. So we've owned this position for about a year now. And we can see here that we invested roughly $1,600, $1,700 into this position. And it had been riding pretty nicely for a while up until about November 15th of 2021, where it hit a high of $2,986. So that's nearly $1,000 as of where it's at currently. And it has pulled back and pulled back and pulled back with no end in sight. We thought we might have some trend in here. We can see it's, double bottom right here, but it recently looked like it broke that support. So this one may have some more room to fall, or it could just be an opportunity right now to kind of buy a bit more. We don't know right now. Starbucks here, that one's just been down in the dumps. The interim CEO just announced that they're not going to be doing any stock buybacks. And they're going to be focusing more on the baristas and, internal issues. So this one just has been on the decline, but this is a position that we recently opened. We've been adding to it, so that it's down 17% doesn't really matter. This is the position where I want to get this up to be about $2,000. So that leaves me with about $500 or $450 to kind of average into this position, regardless of whether it's negative. This is something that I'm looking in the next 5-10 years. Starbucks is not going anywhere, right? There's only a few competitors out there here locally into Starbucks, and globally, right? Starbucks is going to always be a major competitor. Here locally, I only think of Starbucks, Dutch Bros, the Human Bean, BlackRock. Those are the four primary coffees. But Starbucks are everywhere. I see their lines constantly full. So whatever going on right now, interim, that's just something that's going to happen here in the short term. It's going to have that opportunity to allow investors that are interested in the company to buy it now, and then over the future they'll fix whatever issues and the stock will just recover and return back, moving in the positive direction. So I have nothing in the short term that I really care about there. I'm just going to be averaging into it, given the opportunity here that it's 17% off on discount, right? Just wherever it was 17 or wherever it was just a bit ago, it's 17% lower than where I initially thought it would be a great position to buy. Clorox here, this one's been, trending around. I'm really not down 41%. This is a little bit off. I'm down roughly $400. I invested about $2,000. That's a little over 20, no, it's a little under 25%. So it has came back off those lows here. If we take a look at the position in itself, we can see here, it did hit a low here of 1,418. and has recently kind of broken a little bit higher. We'll kind of see where this kind of goes. It's kind of trending now. It's kind of hit maybe some resistance in this area right here. We won't know until we actually look at it at the, we'll break it down here in just a minute. So those are our top 3 winners and our top 3 losers. Now jumping into number 2, the weekly performance. Here we are. We're down 1.45%. We are down a whopping $666.25. So kind of an interesting number there. So here we are. What's the 3 winners of the week? We had Methode Electronics up a nice 3.92%. ABM Industries, this is what kind of popped this one in the second place. It is up 3.4%. Cisco, pretty interesting. Kind of interesting companies here towards the top. What did well this week, right? Methode, ABM Industries, Cisco, WP Carey. These are names that I don't really see too often in the headlines. They're just kind of out there. Oh, Stanley Black & Decker making a bit of a recovery. This one had been down in the dumps for quite a while. Doesn't actually showcase it a whole lot here, but it's been downtrending since, hey, look, May of 2021. Been on a bit of a downtrend right there. But I guess we'll kind of see here what exactly takes place with it. And we're looking at the 1 week here. And then our worst performance this week, IIPR, down a whopping 11%. So last week we were positive. This week we're not positive. We're actually down by 6%. So it was up 6%. Now it's down 6%. Cisco, they're losing a ton of market share. I'm actually considering selling this one. My company that I work at, I work in the IT department, network technician, network engineer. We recently replaced some 100 switches that were Cisco based. We have Cisco routers, Cisco switches, Cisco firewalls. We had Cisco, different tools that monitored and did everything as far as port control that was Cisco based. And now when we took a look at, Cisco, Juniper, Aruba, and some of these other brands, we ended up not using Cisco any longer. And I believe that a lot of other companies will also be moving away from Cisco as like the leading market share of networking gear. So I may end up just kind of knocking this one out of the portfolio here very shortly and just kind of moving the equity into something else. But right now, I guess I just have to see. I've been kind of telling myself this for quite a while. It just hasn't happened. AVI. This one took a 5.54% hit, but it has been rocking here over the last few months here. We can see it had a huge peak here. We took profits, right? It wasn't not too long ago that we decided to take some profits. Yeah, actually, this is profit taking right here. We only took a little bit of profits, right? I think we only sold like $250, $300 of profits. And it had rode up just slightly more since we took those profits, but here he had a bit of a fall. So I'm going to wait off a little bit. I'd like to buy Avi a bit deeper, but I would really love Avi to kind of break down and fall off a cliff, essentially, right? So what is that, the quarter? Oh yeah, Stanley Black & Decker has been beat up on the quarter there. Yeah, there's a lot of companies out there over the last quarter that have just been destroyed, but not too bad. Starbucks down 4.25 on the week. JP Morgan down 4.17. Apple down nearly 4%. Pfizer down 3.7. So it's kind of an interesting mix, yeah. I mean, it makes sense for a lot of these positions to kind of be down. Apple, obviously, they've been kind of high and fly recently. I do like to see them kind of down. JP Morgan's kind of interesting. I think it was earnings based. This is all earnings based. They came out with some earnings. They actually missed, I think it was revenue by some 40 or 50%, I believe. I don't have the numbers in front of me, but I remember seeing that was a big factor this week as far as why JP Morgan was down. So overall, portfolio down 1.45%. If I compare that to, say, the S&P 500, the Dow Jones, the Nasdaq, and VTI, this is one I just like to kind of throw in there right now. We can see that the best performer here was the Dow Jones, down roughly 0.49%, actually held up very nicely. But the S&P 500 in the green, oh no, this is the total, this is VTI. So VTI is down roughly 2.09%, the S&P 500 is down 2.45%, and the Nasdaq is down 4.45%. So these are the dates between the 8th, which is last Friday. So let's actually change this to just be here. We'll do like this. There we go. Now this is more accurate. This is going from the 8th, which is Monday, up until the 14th. And Friday, we had Good Friday, so the markets were closed. So here's the actual breakdown of the week. The Dow Jones down 0.89, VTI here down 1.79, the S&P 500 down 2.19, and the Nasdaq down 3.07. So that's more accurate. We can kind of see in comparison to these, we're not down as as beat up. We're actually in between the Dow Jones and the S&P 500 or so, right? Those are the main ones that I kind of like to base my portfolio around. We're not always as negative or as positive as the S&P 500. We're a little bit in between. And now jumping in the number 2, I'm sorry I took up so much time in number 1 and number 2. We're going to go ahead and get through this pretty quickly here on the number 3. So number 3, what sort of dividends or what did we buy this week, right? So we purchased 2 companies. We purchased JP Morgan and Starbucks, roughly $150 of each of those positions. We also had some dividends roll in. We had $12.32 of Essex Property Trust. This is a REIT, a multi-family REIT, I believe. We also had $18.26 from IIPR. We had $8.54 from Main Street Capital. This is a monthly paying dividend company. And we had WP Carey paying out a whopping $21.74. Take a look at that. We broke $60 this week. On a 1-week basis, we were paid $60.86. This is one of our biggest weekly payouts. So it's really nice to see that. Plus, we deposited that capital of $127.66. So $127.66, that leaves us with a grand total of $188.52 of buying power this Monday. So what exactly are we going to buy? Well, we'll find that out just here in just a minute. So we're going to go ahead and update our dividend tracker. So jumping over to trackyourdividends.com, this is where our current portfolio is currently making 1,000. Let me go ahead and update my sheet right here. We're making $1,157 right now. But again, we have to update our buys last week. So last week we purchased 2 companies. We purchased JP Morgan and Starbucks, right? So I go into my holdings and I look up Starbucks. So we now own 17.85237, and the cost basis on that one is $18.23. And we also purchased, what else? JP Morgan. That's right there. Let's see here. JP Morgan is 8.3332, and the cost basis on that is now $118.49. So let's go ahead and jump back over here. So we're going to go ahead and update JP Morgan. JP Morgan was paying out $28.91. So $28.91. Let's go ahead and update that. So the shares here, we went from 7.22 to now 8.3332. And our cost basis per share went up. We did buy up. We went $118.49 is our new cost per share. Let's go ahead and update that, and we can kind of see here that JPM went from $28.91 to now $33.33 of dividends. So that's a nice little, $5 increase there in dividends alone, which is very nice. Now let's go ahead and update our Starbucks position here. Starbucks is currently paying out, let's see here, $31.43. And let's go ahead and update that by hitting the little stencil. We went from 16 shares to now 17. shares 0.85237, and our cost basis went from $89.03. We're actually averaging down here. We're now at 88.23 cost per share there, and we go update that. Now our annual income went from $1,157 to now $1,165. So we went up roughly, what, 3 and 5 is 8. So we increased our dividend income annually by $8, or roughly $2 every quarter, which is pretty nice here with our portfolio. So our yield on cost is now 3.22. I don't think that changed. I think that remains the same. But overall, we're doing pretty good. Our portfolio remains about 43,000. We're making about $1,165 in annual income. Okay, we've covered the dividends. Let's go into stocks to buy this week, right? What am I buying? Well, I listed off some companies here. We have JP Morgan, Starbucks, Stanley Black & Decker, Colgate, IIPR, and Cisco IIPR. We'll take a look at this one really quickly. I'm not going to be buying more of this one at the moment. Again, it lost nearly 10% here in the short term. You know, it had been kind of hitting these, double dip right here. It double bottomed, hit broke above the 50, and retraced really hard within the last week, losing 10%. So this one's a really hard one to kind of buy. So I'm not going to be buying any more of that one. Cisco, we talked about this one as well. It's losing market share. It's not doing so well right now. Had a death cross here. You know, anytime you see these, I don't want to say sell, right? You shouldn't sell it, but there's definitely going to be that time where you're going to have opportunity to buy if you really want to buy it, or if you want to hold it, that's the opportunity to hold. I'm not buying Cisco, as I kind of talked about earlier. I do believe in potentially selling it, but now that it's broken below where I'd really want to sell it, I really don't want to sell it now. So I'm going to be holding on to Cisco for a bit and kind of seeing where this one takes me. What is the overall, how much was it up still? We're up roughly 66%, but that can quickly vanish. I do believe that this can go away pretty quickly. We did sell it at a high of around 50 or 60 bucks at one point and then rebought it in the 30s. So this could be an opportunity to potentially just kind of take profits, leave it as it is, and wait for opportunity in the future, because I do believe it'll come. Colgate, this one is on the up and up right here. But again, if we look at the 3-year here, this one has these periods where, hey, it goes up. Guess what happens? It goes down, up, down, up, down. Now, let's take a look at the earnings per share here. Let's go ahead and bring that in. Earnings per share, trailing 12 months. Yeah, earnings per share. Check a look at this. It had been climbing nicely, right? Let's see. Yeah, we'll look at the 5-year here. Climbing nicely with the earnings per share here. Earnings per share is growing. Share price is growing. Earnings per share peaked. Share price kind of fluctuated. It's been kind of waiting. So earnings per share has been kind of fluctuating over these last few years, and whoop, fell off a cliff. So Colgate, I don't know if Colgate's going to hold on. I think Colgate may go down even lower here. We can see Colgate earnings per share kind of dropping off a cliff into 2022. But this could just be inaccurate. I would really have to go and do a little bit more. Let's go look at the earnings per share for the current year and next year. Let's see if that's better. Let's go ahead and get rid of this one. And they're expected to actually rise, right? We can see it right here. 2021 was around so, and they actually lowered their guidance. So that's probably what caused them to kind of fall as much as they had in the short term. But they seem to be kind of recovering. Kind of interesting. I don't know. I definitely have to go look at their earnings here if I wanted to buy it. Stanley Black & Decker. This one's not going anywhere. This one's lost, I believe, 20-some% this year alone. If I look over here and I look at the year to date, I don't know if Stanley Black & Decker is in here, and it is not. So it does not pop up in here, but you can see over the quarter, Microsoft down 16.8%, Google down 12%, Amazon 9%, Tesla 6%, Apple nearly 7% year to date. Microsoft is actually interesting. I do not own that one. Let's go ahead and pop that one in real quick. Take a look at the 1 year. Interesting. Okay. It's been trying to find the support line here. 279. It's definitely been trying to support itself. Yeah, but that 50-day cross under. So we are seeing some weakness. We do see that death cross right here. But it does have some support. But again, this one might actually break even further. It could break as low as 240. or it could go higher. But here in the short term, are you more likely to see the market move higher, or are you more likely to see it move lower? And I do believe that we're going to see the market move lower versus higher. If I were to say 50%, 50%, would you believe that the market's going to move higher 51% or lower 51%? And I do believe in the short term that the market will move lower in the short term. There's a lot of pressure. The Fed's going to be raising rates higher or faster than expected. I think they're pricing in 13 rate changes. They're saying that the next rate change could be a 0.5%. Also, while that's positive for financials and tech make up a big portion of the market. Higher interest rates does not mean positive for financials, as individuals are not going out there and getting mortgages and refinancing their homes. That's just not happening. Individuals out there here in the short term, I had coworkers that are listing their homes. They've had to drop their prices down by thousands of dollars, tens of twenties of thousands of dollars to actually make somebody come in and make an offer. They listed their home. Nobody offered at all. They had to drop their price. I have had a few friends do this, and they were selling a home and buying a home, so they can no longer just kind of list it and get people coming in and just over offering. That's what happened with my house. I lowered, I came in with a high price, I thought, for my home, and they came in and offered over by $20,000 on my home, or actually $20,000 is what I actually ended up selling my home last year over asking. So that's not happening anymore. With raising rates, everyone's mortgages just basically doubled from about a year ago, with those raising rates going from 2% to now 5%, some 6%. So I don't think this can be positive for financials and tech. Any tech companies that's holding debt, that's going to become more expensive as well. And those are some of the largest portions of the market. So that's a lot of downwards pressure in the market. So I don't believe that we're going to see a lot of green, but we'll have a little bit of fluctuation within this area. So Microsoft, I think that there's more room to fall for it. Stanley Black & Decker, this one's just kind of been on a downtrend. Starbucks, again, it is in a downtrend, and I don't mind. Starbucks is just a position I recently purchased. If I don't see anything I'm really willing to buy in the short term, I will probably just continue to buy it. Now, what's the yield on this? I don't know. What's the yield on these ones, right? I want to know. What are we looking at for yields when I buy JP Morgan and Starbucks again? So JP Morgan is now over 3% there from just a year ago, down in those 2%. And then Starbucks here, 2.36, just from about a year ago was down at 1.5. So I'm nearly getting a 1% gain yield on my Starbucks just from 1 year ago. And JP Morgan, take a look at that. It was down here nearly in that 2% range, but now it's at 3.09. So I feel like I'm getting a lot of opportunity here with JP Morgan and Starbucks. So I'm going to continue to average into these positions. Maybe not JP Morgan right now. Let's go take a look at the position. JP Morgan, how far am I up right now? I'm up 24%. As much as I would love to buy more JP Morgan, I'm going to hold off a little bit. Let me see here. JP Morgan, does it make sense to buy it? Probably not here in the short term. But I'm going to go ahead and just buy some Starbucks. Because I can. Because I don't want to. I don't know when the bottom is in Starbucks, right? You don't know when the bottom of these positions are. Starbucks in itself isn't being overly hit by what's going out there in the market at the moment. I think people are still going to buy their coffees. They're still going to buy their products that they need. People need coffees. They're addicted to them. It's just something that they need. Okay, so we went ahead and purchased some Starbucks here, and we can see here that we have our one buy coming up. View details. We can see that we are buying $188.52 of Starbucks. That is all going 6:30 a.m. tomorrow. So there we go. We got our buys for number 5. So let me know down in the comment section below, what exactly are you guys going out there and buying? There's definitely a lot of opportunity out there. I was just taking a look here at Costco, Dollar General, Dollar Tree, Target, Kimberly-Clark, Procter & Gamble, Pepsi, and Coca-Cola, as a lot of these companies here within the consumer defensive have been doing really well. So let me know down in the comment section below, what are you guys buying? What are you guys taking a look at? Let me know down there below, and I really appreciate it. Again, I appreciate everyone tuning in today, and I hope everyone has a great day. See you guys next time. Bye-bye.